Well, CLSA has come out with its India strategy note. Seems like they're preferring a lot of domestic stocks right now. In fact, they do suggest that it's time for some amount of rotation as far as the portfolio is concerned. They add that 20% decline in India's active COVID-19 cases from its peak, and the entire hope of a vaccine will definitely drive economic normalization over the coming months, which definitely will bring back focus on the domestic stocks and will bring them back in favor. Well, they also add that Indian COVID-19 curve may be further tamed as calendar year 2020 draws to a close. So this would suggest some amount of positive outlook going forward as far as the COVID trajectory is concerned. Well, they also add that CLSA's index of COVID-19 resilient stocks have outperformed the index of COVID-19 impacted stocks by a significant degree. Also, now it's time for investors to basically find new winners. When we look at the markets, Nifty particularly is now back to pre-COVID-19 levels, and from within this market, looking at predominantly the sectors, the COVID-19 resistant sectors like healthcare and IT are now pretty much at 34 to 35% above the pre-COVID-19 levels. While on the flip side, banks, metals, power, oil and gas, and also the capital goods segment and sectors are nearly 16 to 27% below the pre-COVID levels. So the room for growth here would be little higher. They also add that they have entered the annual portfolio's rotation season as far as India is concerned, and they expect some amount of portfolio adjustments for economic normalization, which would favor the domestic plays. When it comes to what they're recommending, well, they are suggesting a shift to banks, cement and L&T from the current IT and pharma. Well, they add that banks and infrastructure may be gainers as economic normalization trades pick up. And from within the banking space, they are preferring and liking ICICI Bank, State Bank of India, and also HDFC Bank. When it comes to the cement space, they're definitely preferring Ultratech cement. Well, they also add that within the domestic stocks, they are a little wary of the high expectations that are built in terms of valuations for the auto stocks, as they expect consumption space to pick up only gradually. Well, definitely we've seen that the auto stocks were pretty much beaten up, but in the last few weeks and probably in the last few months, we've seen that the auto stocks have really gained rather smartly. So that is what a bit of a caution for them coming in, saying that they are a bit concerned or a little wary of the high expectations that has been built on this space. Well, from among the defensives, they're preferring Bharti Airtel and also the utility stocks, which includes your NTPC, Power Grid, Indraprasth Gas, and also Mahanagar Gas.